for the past 18 months or so, we have been in the middle of the financial services ecosystem, not just thinking about, but being part of what we believe to be the starting point of what we consider to be the next era of the banking environment. And so to this point, a lot of what we've seen in the banking space has been pretty incremental. It's been about modernization, technology enablement, improved customer experience. What we've been able to shine a light on is that there are some fundamental things as important as catalysts that have propelled us to this point, like smartphones and the World Wide Web, that are going to propel the banking environment to a very new place. And those things center around three primary catalysts. Number one is an entirely new trust framework, an entirely new trust dynamic. What does that mean? Well, trust for the financial sector has been about safety and soundness, high ethical standards, resilience, protection, compliance, the competitive moat. The next era of trust is going to be about how institutions really make solutions relevant in the context of the connections you make with an end customer. Taking personalization not just to a personal level, but an individual context that's tied to emotional needs, financial solutions, and life events. Second is around the entire ecosystem and platform enablement movement that we see sweeping from Far East all the way now through Europe and into this market here. What are those ecosystems going to do to a bank when it's no longer just about an app in your pocket, but it's an entirely new mode and paradigm for interaction with your institutions, with an ecosystem around you, how you connect financial life to every other aspect of your life and set of needs. And then finally, the way banking is done is going to change. And we see it emerging day by day in the ecosystems that we're all seeing. It's not just going to be about products or transactions and the way banks make money today. It's going to have to rethink the entire commercial model for how consumers engage financial life, how they pay for it, and how they benefit from it. And we've shown with some very clear, compelling evidence, and now lots of news stories, that subscription-based banking is going to be part of the next frontier in this new era. So with that, I'm joined by an incredible panel of speakers here today. I'll let them all introduce themselves as we get to their individual perspectives. But let me sort of kick it off with a question over to Tiffani. So Tiffani, at the Aite Group, you focus a lot on the digital banking customer experience. Based on the research that you've done, what do you see as really the next frontier of banking, based on what you've seen?
Sure. So before I get started and answer your question, I'll just give a brief introduction of who Aite Group is. So we are a research and advisory firm that focuses exclusively on financial services. So we work with banks, credit unions, and technology providers in that space. I primarily focus on digital customer experience. So the first thing that I will say to you is that everything that you talked about around trust, convergence, financial wellness, and digital are all themes that are emerging in the banking space. So the first thing that I'll say is if I take digital as one point, we know that 86% of consumers log in to check their accounts 2 to 3 times per month. So if you think about that statistic and you think about branch usage, in a study that FIS conducted, they asked customers in the last year how often they had actually gone into a branch. And about 4 in 10 consumers said that they had not used a branch at all in 1 year. If you start to break that number down by millennials, that jumps up to 6 to 10 consumers have not used the branch at all. So I think we can pretty much safely say at this point that the digital channel has overthrown, or dethroned, I'll say, the branch channel as the primary channel where customers interact. And so this is putting increased pressure on financial institutions and fintech companies to really be able to reinvent how they interact with consumers. And so if you think about branch losing its relevance because consumers are no longer going in there, you think about customers increasingly interacting in digital environments, And then you also think about the unmet needs in the market to really be able to help consumers manage their finances in a way that aligns with their short and long-term goals. There's a tremendous amount of opportunity for financial institutions, fintech companies, any player to be able to come in and to use the trust that they have in their brand and to be able to build experiences. So if I take the concept, for example, of financial wellness, and I think about that, I think there's a slew of headlines that clearly demonstrate that consumers don't have money to pay for unplanned expenses. They're not saving for retirement. They're living paycheck to paycheck. They have a tremendous amount of debt. So when you start thinking about financial institutions who have traditionally, to your point, have competed on products and services, and you start to shift your mindset to one that is competing on experience, there's an opportunity for financial institutions or anyone in the space to be able to deliver a proactive, predictive type of experience that allows the customers to meet their short and long-term goals. And when I say short and long-term goals, I'm talking about personalized goals. So if I think about that concept of financial wellness, one thing that I'll say is in Q4 of 2017, we did a survey to ask consumers if they were willing to use a virtual financial wellness coach to help them get real-time advice on how their spending impacts their ability to meet their goals. And 3/4 of consumers between the ages of 22 to 49 years old said that they were interested in using the virtual financial wellness coach. So when you start to look at that number, even of consumers that are 50 years and older, 62% of consumers were willing to use this virtual financial wellness coach. So it shows a tremendous opportunity where customers need financial help and are willing to use a virtual financial wellness coach in a digital environment. When we start to think about new business models and even being able to create value for a customer, we also asked them would they be willing to use this virtual financial wellness coach if it meant that they had to pay a fee. And we gave them different tiers, but if I just look at their overall willingness to use a virtual financial wellness coach to reduce debt, to save money, to track their finances, to increase their financial education, 40% of the consumers that responded to that survey said that they were willing to pay. So I think we're just in this opportunity that not only can we use the trust that brands have in the industry, the unmet customer needs around financial wellness, and even the vast amounts of data that will allow us to get a better understanding of customers and even be able to create new business models as a result of that.
Thank you, Tiffani. And so let me use that opportunity maybe to pivot to a complementary viewpoint. Jay, I'm going to come to you because I think this dovetails into this discussion about the business model of banking. And obviously with BankMobile and your bank as a service platform, you can introduce that more fully. Our evidence shows that the intersection of big tech and financial services is just happening more and more discreetly, and it's going to happen more over time. What's your thoughts about how the banking business model itself is changing, and how does that inform what you guys are doing at BankMobile?
Sure. Thank you, Nikhil. It's a pleasure being here, and especially with this high-level panel over here. I've been in the banking business my entire career, and the business model of banking has to be customer-centric and driven by that. Customers are looking for a place so that they can manage their money well, they can get a return on their money, and there's a way that it's becoming a real helpful way for them to meet their goals. So it is, but unfortunately, the traditional banking business is, in my opinion, the most antiquated, inefficient business in the world. Okay, so we looked at this as that the disruption, the way to disrupt it is that you got to meet the following criteria. Number one, that you got to come up with products and services that meet the needs of those customers, and they are better than what's available right now. Number two is that there's got to be more affordable right now, because there's 3 billion people in the world I cannot afford the banking model the way it is. Number three is there's got to be a model so that you can make at least the same kind of returns that are being delivered by the traditional banks. And that is something which nobody, or not many of the challenger banks are really attacking right now. And last but not the least is that there has to be a consumer and I'm talking about the consumer banking right now, who says, this is awesome. That is a test. So keeping that in mind, BankMobile is one of America's fastest growing digital bank with a bank charter. Okay, because that is very critical differentiation of ours. And we are a mobile-first digital bank. We have about 2 million customers, and we are a profitable. It's net income after taxes. We are making a couple of $1 million, okay, a year right now. Okay, and we are growing at about 100,000 customers a month. Okay. And we differentiate them in terms of what is profitable and what's not profitable. Okay, so I am not sitting here and telling you we are having 100,000 profitable customers. That is not correct. All right? So to answer your question, we look at banking first being customer-centric. Number two is it has to be profitable, and so for that, you have to have a direct deposit. Okay, so today we are announcing, as an example, to be competitive with Chime as an example. So we are offering also the 2-day advanced paycheck, plus personal bankers for everybody who keeps above a certain amount of money in the bank, plus who directly deposits that. It's high tech supported with high touch. You do not, in banking, you must have customers for life. Otherwise, transaction-oriented banking doesn't have enough revenues. You got to have net interest income and you got to have fee income. Otherwise, you cannot meet the needs. So we've designed our products and processes which meet the criteria that they are equal to or better than what's available right now. They can create profitability that's equal to or better than what exists right now. And they are more affordable to customers. And at the same time, they are growth oriented because the customer says, wow.
Yeah, that's a great perspective. And I think it brings to life this interesting dynamic we're seeing in the industry, and I'd like Dan to comment on this, but let's start a little bit with basics. So Dan, before we get into all of the nuances of this new environment, first introduce yourself, and then second, just describe to the audience, what is a challenger bank, first and foremost? And then let's sort of take that and explore what are challenger banks really doing that meets a need that is existing in the market in a different way.
Okay, cool. I'll introduce myself. I'll tell you a little bit about Revolut, and then I'll respond to the question. So I joined Revolut straight out of college. I was an early employee. I think I joined Revolut when there were about 10 people in the London office. We worked in a co-working space in London. And since then, we've scaled to around 2,500 employees from San Francisco to Tokyo. So I've seen what has been an amazing journey. We now serve customers in around 35 different countries. Personally, I assumed the role of the North America general manager, so oversee operations and business in North America. Let me explain a little bit about the evolution of Revolut. So Revolut was founded by 2 investment banking professionals. And the reason that they founded the business is because they were fed up with the rate of progress in investment banking. So they created a pretty strange product. It was a prepaid card with an FX trading element. So you could download the Revolut app, you could order the prepaid card, and then you could trade pounds to dollars to euros. And what was the unique selling point of the product was that there was no FX spread on these trades, and the trades would happen at spot interbank. So what we did is we took a rate feed from Morningstar or Reuters and just passed that straight through to the consumer. So as the consumer would trade, say, pounds to dollars, they would get the same rate that they would see on Google. And I think this really resonated with consumers because they'd never seen that level of transparency before, and the business grew incredibly quickly. We got to a million customers within the first year, and this triggered a complete rethink of our business model and strategy. Since then, we've raised hundreds of millions of dollars, and we have millions of customers. A metric I'm incredibly proud of is while it took us 1 year to reach the first million customers, we opened 1 million depository accounts in the past 5 weeks or so. So growing incredibly quickly. So moving on to the questions themselves. So what is a challenger bank? I think a challenger bank is a platform or a business that challenges the ways and the processes behind traditional banking. So to link into what Jay was saying, banking as an industry and banking as a business has been around for centuries. If you think first principles, I think lending, if you look at history, look at the Romans, look at the Greeks, and think first principles, lending money to other people is one of the oldest industries, or some of the oldest activities out there. So banking as an industry has been around for centuries. I think in order to challenge that, you're not necessarily reinventing the first principles or the fundamentals, but you're reinventing the processes behind delivering those.
And what do you think, Dan, about being a challenger bank now around the solutions that you're providing? Why do you think this is important for customers? Why should they have these choices to do their business with a challenger bank as opposed to just with a traditional institution?
Yeah, so I think that what the challengers do is they solve customers' problems. So while banking as an industry has been around for centuries and the fundamentals haven't really changed, there are problems with it. So the challengers are really good at identifying those problems and solving for them. And that is what has really accelerated their growth. And I think that the challengers are now almost inventing or finding problems which consumers didn't know they had and creating solutions for them. And that really resonates with the modern consumer.
So let's talk a little bit more about solutions. So Lindsey, over to you. N26 is quickly becoming a brand in the financial sector, and more so here in the US market where you're focused. Who is N26? Who are you targeting in terms of customers? And what are the relevant solutions that sort of fit into this new era of where the banking environment is going?
Absolutely. First off, I'll start off with a little introduction. I lead product for N26 across a number of global markets, including the US, which we just entered about 5 months ago. So N26 is a mobile banking solution that operates across 26 countries. And it was founded by Valentin Stolf and Maximilian Teinthal in 2013 in Berlin, actually, where the company started. And they had a belief that banking had very quickly become, it had lacked transparency. There was no focus on the product, so consumers were stuck in hours of consumer support calls. They didn't have ease of use for basic things like even opening an account. And they said there has to be a better way. And so when they started the company, they said there's some principles that we can't diverge from. And those principles are, number one, transparency. So we are strongly in belief that there should be no hidden fees. So basic things like charging a monthly fee, we don't do that. We don't charge customers for maintaining a minimum balance. We think that, in fact, is quite predatory, and we believe there's a different way. We also said that we wanted to take simplicity and design in our experience from day one. So even basic things like a consumer should be able to do, like open a sub-account and save for their honeymoon or save for college. That in a traditional bank has historically been so incredibly hard. I know that when I've done it myself, I've oftentimes spent hours doing basic things like this. And so when you look at the design of technology and how mobile-first apps have been able to transform daily activities, even doing things like a sub-account, with our app, you can actually drag and drop and open a sub-account to save for, let's say, your next holiday. So for us, those design-focused principles have been really key to how we've expanded into new markets. Now, I think one of the things I'd like to talk about, too, is why we entered the US. So I think a lot of folks said to me, even when I joined the company, said, you're going to join a European bank and they're entering the United States. Are you crazy? And I said, no, we're not crazy. I'm not crazy. I think the thing that is exciting about us is, first of all, the similarities. So in the United States, like European consumers, people want a better way. Jay, you mentioned it in a number of things. Consumers believe that these basic things should be easier. They believe they should be cheaper, and they should help them prepare for better financial outcomes. And so those things Americans and European citizens for sure agree on. Given we had pretty strong success in operating successfully across 25 countries in Europe and the UK, we decided that that was a durable advantage with technology-first approach to enter the US with. The thing that was different that we see in the United States compared to Europe, it's no secret that there is a much larger wealth gap in the United States than there is in Europe. That's for a number of socioeconomic reasons, but I think what's more important is to focus on how it manifests and what solutions we can solve for consumers. So one of those very clear problems of that wealth gap, you mentioned, Tiffany, is that over half of Americans are in credit card debt. So one of the first things that we didn't do is we did not enter the United States with a credit card offering. Over half of your daily spend, though, is in the United States, is on a debit card. So things like going to the gas station, things like going to the grocery store and a debit card. And we believe at N26 that we could come in with a durable advantage and actually have rewards on our debit card. I don't know how many of you, whatever you have in your wallet right now, but I can almost guarantee that a majority of your rewards are coming from credit card offerings. We believe that there's a whole subset of American citizens who are using debit cards and believe that their money should work for them. So we've launched a rewards program, for example, that helps them save money on the things that they use the most, whether that be Headspace, which is a meditation app, or whether that be that Booking.com, whenever they're making their daily travel. So these are some of the nuances and the differences that we've seen in the market, but what I'm excited about is our durable advantage is a design-first approach to solving those problems.
So what this does is shine an interesting light on an unfair conversation, because there's not one incumbent bank on this stage. But let's talk about that. So Tiffani, back to you.
Okay.
In your research, in your travels across the industry, what's your perspective on what will happen with the incumbent banking industry? What do incumbent banks need to do to maintain their level of relevance with the series of needs and solutions that have already been articulated here on this stage?
I think the biggest one is that, Jay hit on this earlier, I think the banking model as it exists today will be obsolete. Most financial institutions that I talk to are very much moving to, as everyone said, digital first. But on top of that, they're also moving towards using data-driven approaches to be able to solve for the customer experience. So if you think about traditional banking and you think about how banking has existed over the last decade, financial institutions have been very, I'll call it, reactive, meaning there is a point or a life stage that a consumer has that has a financial impact and drives a financial purchase. I think in the future, if you start thinking about data first or data-driven customer experience, you move from a much more proactive and predictive customer experience that really allows a financial institution of any size to be able to go out into a customer in their everyday life using something like a smartphone to help them guide them through their everyday life, and more importantly, to be able to help them make decisions in their everyday life that have financial impact. And so I think if I start thinking about unmet customer need and the debt problem and the savings problem, I think one of the major things that has been missing in the industry is really helping consumers understand how the decisions I make today in my everyday life impact my short and my long-term goals. And so how can you insert yourself into conversation with an actual customer and help them make better decisions that align with their goals, be able to offer them actionable advice, and even be able to create intelligent conversations with them. And so, when I start thinking about all of that, in the future, I think from anybody that wants to be in this space, it is very much going to be about using data to create new business models and also to create new ways to interact with customers.
It's an interesting context, but let's probe on it further. So our research showed, and when we were speaking with industry executives as of 18 months ago, being almost laughed out of rooms when we were stating with a high degree of confidence that we see banks becoming underlying platforms for technology firms who want to offer banking solutions to their end customers. So tech firms becoming the experience layer where the bank becomes the platform. But, Jay, that's the business model of BankMobile. How do you see this trend line going forward? Are the big tech and financial institutions coming closer together, or is this some other competitive force that are going to drive them apart over time?
See, success in banking is attracting customers, making them say, wow, this is exactly what I was looking for, and keeping them and making them customers for life. So traditional banks, and we run a traditional bank also, which is shrinking, and our digital bank is increasing, both in the business banking and the consumer banking side. So traditional banks have used branches or sales techniques, other types of sales techniques to attract customers. So we say B to B to C for a bank is bank through a branch to a consumer. A B to B to C can also be a bank through another brand to a consumer. And you can use technology to connect this and make this an extremely viable solution for those customers. So we said, let's assume branches were illegal. That's how we started this concept. Illegal. And we wanted the customer to say, I want this, and to be able to come to you. How could you do it? And that's how we said, with technology, you can do it. And we are not interested in attracting people just to our website and creating, havoc and just signing up for it and saying we got 1 million customers. We sort of went through that phase because it makes you feel good to be able to say I got 1 million customers. I'm telling you, we have zero interest in that. Zero. Let everybody else get those millions of customers. We just want to be able to get extremely happy customers who are also profitable for us. So if we can do business with business partners and make it a win for us, win for our business partner, and win for the customer, our market is global. We are not. We are a bank in the United States, and we are a tech company throughout the world. I want you to download T-Mobile Money app and look at it. 5 touches, account is open. Frictionless experience. There are perks for every single thing. There are benefits for the consumer, for the customer. There's 4% interest on checking. You get money back. This is the kind of stuff that you can create today, okay? And that to us can be done throughout the globe. And BankMobile is in a business to be a tech company, fintech company throughout the globe, and a bank in the United States. We are very focused. We have zero interest in being a bank outside the United States. This is bigger than majority of the world, so why go elsewhere? But tech, anybody sitting over here who's interested, we can put them in business. And also partnering with other folks like EY and Deloitte and Andersons and whatnot, and McKinsey's, we are already talking to all of them to see how we can help other people have a business strategy that's profitable.
So in this context of being platform driven, so outside of the US where you're a bank, in the rest of the world, you're a platform. So Dan and Lindsey have both spoken about the context of really starting from a platform lens and then thinking through the customer experience as a first and foremost. But the incumbents have an inherent advantage of scale, brand, reach, distribution. What are you doing or seeing to be able to counter that or play a role where you're actually bringing differentiated offerings and solutions to the consumers who are actually in need of these more simple life event-based services? Lindsey, I'll start with you, and then Dan, hopefully you can build.
I think that's right that historically the traditional banks have had an advantage because they had a marketing footprint or they had branches. But I guess the argument that I would make is I don't think that consumers are making banking decisions at branches anymore. I think they're making decisions on comparison websites. I think they're making decisions by talking to their friends. I think they're making decisions about the lifestyle brands that are going to help them have better financial outcomes, not necessarily about who's going to give them X percentage versus Y percentage. They care about those things, but it's not the first place that they go as a branch. So when I think about our advantage is we really have to understand where the consumer is making those decisions, meet them at those points of decision, communicate effectively with them, show them transparently what the product is and how it's going to help them. And then I think importantly, technology is the platform that is a differentiator. So I think the other advantage that we have is that we were born 5 years ago. And so we had access to technology to build our company with, to build the right algorithms, to do things like personalization. Wouldn't it be cool if you went skiing, you booked skiing passes, and you also could be recommended skiing insurance at the same time? So these technology platforms are able to transform the way you think about your money. What if you could save without even thinking about it? Like, every consumer, I used to work at Intuit, I've worked at Stripe, a number of fintech companies, and every study we did, we paid a ton of money for these studies, and it always said, 9 out of 10 people want to budget and save better, but 9 out of 10 people don't save and budget. You know why? Because it's hard, it's a lot of work. So wouldn't it be great if the technology could actually do that for you without even thinking? And so that's a competitive advantage that we have at N26.
So the intuitive sort of embedded experience, no longer this sort of conscious need for a financial product. Dan, what are your thoughts from Revolut's perspective in terms of this new era? What are you facing?
Yeah, I have a slightly different view. So I think that the big incumbent banks in America provide a very good user experience. I think that as a consumer, they give me everything I need. And I'm very happy with the services they offer. And I think that the market is going to go in the following direction. I think it's not a winner-takes-all market, but I think we will see mass consolidation. So I can never quite figure out which metric to use to size the amount of banking institutions or institutions engaged in banking in the US, but there's a lot of them, there's thousands. So I think we'll see a mass consolidation like we have in parts of Europe. And I think that it will be the big incumbents that win, and the fintech companies which are ahead of the curve, which have launched 4 or 5 years ago, like N26 and Revolut, that will succeed. I think a lot of the smaller players or new entrants into the market that don't solve American problems, that are going and being enabled through the likes of BankMobile or the other banking as a service platforms, I don't think those guys will survive unless they focus in on very, very niche problems and solve them very effectively. I don't think they will be able to achieve the same scale as the latter people that I mentioned.
So Jay, how do you respond as a bank of a service platform? The platform provides a significant functional utility to any player who wants to provide banking services. How do they benefit from leveraging it?
I think again, I'll limit it to the consumer market, although we are investing a lot of time and effort in the business banking market. And I think there are bigger opportunities and profitable opportunities in digitizing the business banking market, and the consumer market is I think all these companies, many of the companies, not all, many of the companies who are just focusing on the consumer market will actually be out of business because they don't know how to make money. Yeah, that's my prediction, my feeling, and I agree with Dan absolutely that the bigger banks are very well positioned. They'll survive. It's the smaller banks. I agree with him. Okay, so from our point of view, you think about it. People work, have jobs at companies and businesses and governments and service industries and all over the place. So what have banks done? They put branches where people live or where people work or where people shop. Okay? Technology can connect you from a bank directly inside an HR department of a company, inside a retail store, and inside a home. Your job is to find a way to make that frictionless and make them aware of it and attract. Because guys, banking business is attracting customers, getting them engaged, which is what most of the challenger banks don't understand. What the hell is engagement? Engagement means that they keep money in their account, otherwise you're not going to make any money. All right? So, and then making them customers for life, that you can keep making money on it again and again and again and again and again. Because customer banking is a capital-intensive business. Okay? Unless you want to be just a tech company, that's fine. But then don't call yourself a bank. That's why we have decided we are a bank in the US and a tech company in the world, and helping other people get into it. Okay, but so we are focusing on going to the people's homes, going to where they shop, and going to where they work, and focusing on that. Right now, 1 in 3 Americans who go to colleges go through BankMobile platform. Imagine that. 1/3 of every college-bound American goes through BankMobile platform. It's like we have a digital branch that they walk through, and guess what? We are letting a lot of them walk right through. We are not the best company yet. We are not, okay? But we have a digital branches. Every single HR department of every single company in the United States is a potential digital branch for us. Every retail store everywhere in the United States is a potential digital branch for us. And shame on us if we don't succeed. And Dan, we are going to succeed. And I hope you do too. And number 26 does too.
That's good.
But
we all want to succeed.
You are going to be wrong if you say BankMobile is not going to be around. But,
I didn't say that.
So suffice to say, the game is early. In the proverbial U.S. analogy of a 9-inning baseball game, probably still in inning 1. And think about everything that's happened since 2007 and the digital revolution for the past 12 years, and we're literally still in inning 1. So in that context, we have a few minutes left here. I want some final reflections from the panel, and then we do have time for audience questions. So if you do have a question, please raise your hand. We have mic runners around that will get to you, and we do have some time for some questions. But final sort of reflections question to each of you. Tiffani, I'll start with you. Your research probably informs a lot of this perspective. What do you see as the most exciting thing on the horizon for banking and the industry in general? You can answer it through your own firm lens or just through your own personal perspective on the industry.
Gosh, I think there's a lot going on. If I think and I reflect over the last year on the number of interviews that I've done on various topics, I know one of the things that people continue to argue about and debate about is the branch dead? And how do we actually reinvent the branch to be relevant for customers? And more importantly, to be designed by customer needs. I think the biggest thing that is happening in the market is really the shift to investing in the digital channels. And so if I think about the branch, for example, there's this notion that people believe that consumers go to branches for advice and guidance. I personally think that's BS, and here's why. There is no alternative today to advice and guidance anywhere else other than the branch. And so you can't really call it a preference when there's no alternative. So to answer the question more directly, I think the most exciting thing that is occurring is that people are finally starting to see that we have the data and the technology and the consumer adoption now to really be able to build experiences in a digital environment that truly offer advice and guidance, and to be able to do that in an interactive way. So if I think about the way the banking experience has existed, just to sort of give you an example to sort of paint a picture, when you think about personal financial management, which most financial institutions have embedded in their online banking system, they give you access to categorizing your spending and budgets. So they're making you aware of how you're doing financially, but doesn't really provide you any insight. Nor does it really give you any actionable advice. You made the point earlier that it's a lot of work. It is a lot of work to comb through those budgets and to do spending analysis and to figure out where you should actually shave your spending or your expenses. But if I think about the future, and I think about an example of someone even walking into a Target. You walk into a Target, it recognizes that you're in Target and that you have a household budget set up. And so it tells you, for example, that you have a $500 budget and you've spent $450, right? So now you know that you can only go in there and spend $50. So, maybe at that point the app says, you have a $500 budget, you've spent $450, every time you come into Target, Tiffani, you spend $100. So I've given you insight into your normal behavior and then given you advice on what you need to do, which is you need to trim back your spending. I can reallocate your budgets to keep you on track for your savings goal, or I can give you some other intelligent recommendation that, again, aligns with your short and long-term goals. So the most exciting thing to me is when I think about that scenario, we're finally in a place to have the data, the technology, and the actual customer adoption to be able to support those type of experiences.
Thanks, Tiffani. Dan, we'll go to you. We'll make this a speed round, then we'll get to the questions.
Yeah, so there's 3 things which I'm really excited about. The first thing is simplification. So I think financial products are overcomplicated, and there's so much opportunity for simplification, so Americans can understand them. Even myself, having built Revolut, still get confused by the remortgage process. It's ludicrous. Second thing is the impact on the environment. So there's a large Manhattan headquartered bank. They have the most real estate in Manhattan. They also have a load of real estate in New Jersey and in downtown Brooklyn. That seems to me so unnecessary. And they bombard my mailbox with paper pretty much every week. So I'm just sick of that. Want to make that process good and reduce the impact on the environment. Actually, and I'll leave it there.
Lindsey?
I'll be fast since I know we want to get to questions. I guess as a product person, I'm most excited about the way the product and technology is going to change how people make decisions. You talk about enabling insights and data at the point of decision. Well, the best products that you use, just put money aside, like think about any product you use today. The best product that people love is that when you have information at the time of your decision, not before and not after. I'm excited about what N26 and others are going to do in this space, is to serve up the right contextual insights to manage your financial health.
Jay?
I think very quickly, I completely agree with Lindsey. I think it's all about data analytics and usage of data to be able to make the customer say, wow. And banks have it, but banks are lousy at using it.
Let me wrap that up by offering some reflections from EY's point of view. When you think about banking, financial services in general, what most people don't think about is between one's connection with their finances and one's connection with their health, there's no more an emotional process than financial services is for an individual. It's not just a rational transactional process. It's a deeply emotional process. And we believe this next frontier is going to be about who can solve emotional connectedness at scale. That requires analytics, it requires data, it requires platforms, it requires the simplicity of how you serve a customer across a holistic set of needs and solutions, not just individual products, but connecting emotionally with the customer. Now, we feel proud we're part of this ecosystem, developing solutions and actually working with clients in this space, because there's some pioneering organizations who have seen this for a little while and are now starting to action this. But emotional connectedness and how to make banking relevant in the context of emotions for an individual is where we see this going. With that said, please ask away any question. There's no bad questions. Yes, sir, right over here.
Yes, we talked a lot about digital payments, but one of the, at least from my perspective in the market, one of the reasons why particularly people older than the millennial generation will consider it is cash. What are your solutions for actual physical cash and making its way into your digital cash?
Yeah. So although a lot of the studies will show, even the Fed recently published their 2019 payments study, cash is decreasing. I still hear your point, though. It's needed. So one of the things that we've done in the United States is we partnered with the Allpoint ATM network. And so there's 55,000 ATMs in the United States. In fact, I would encourage you, if you download the N26 app, we have an ATM locator that will tell you there's a number of ATMs in Las Vegas that, yes, we don't have branches, but you can get free cash with N26. So we've realized it's an issue, and we still want to give people access to it. But when we think about our roadmap and we think about the types of decisions we need to make on product, we want to make sure that we're continually following where consumer trends are going over time. The other thing that I would add is a lot of people say, oh, is it just millennials who use your product? I'm really proud to say that our age demographics across all of our markets are very diverse. We have a number of people, a big segment of people in their 30s and 40s who have families, who are managing their finances on N26. It's not just a millennial thing.
And I think you can get cash, you can deposit cash for BankMobile and for T-Mobile money at places like CVS, 7-Eleven, and those. So we've done it both ways, ATMs as well as deposit.
Time for one more question. Yes, ma'am.
Sorry? I can't repeat the question. I can repeat the question like this. What are the regulatory differences to enter the United States market? And two, what is the value proposition? Okay, so first of all, regulatory differences. I would say that in Europe, it's relative to the US, it's incredibly easy to launch a fintech platform until the rise of the banking as a service platforms like J and alike. So there are far more fintechs in Europe, happening in Europe. There are now more popping up in the US. I think the key differentiator is in Europe you can get or you can apply and secure a license which will allow you to operate and own a lot of the sort of infrastructure, whereas in the US the banks are almost the gatekeepers to the card networks and the automated clearinghouse and the like. I think when if you look at the value proposition for Revolut, we've really focused on quite a small number of customer problems. So FX and foreign currency has been a key problem that we focused on, and it's unquestionable that we are the best. We have the best product to send and spend, exchange and hold foreign currencies in the United States.
All right. So with that, Andrew's now here to usher us off the stage.
I am. So please join me in thanking this group for a great discussion. Fantastic.